Hello, how's it going, guys? Welcome to the second subsection of structure. And in this second subsection, we will talk a little bit more about the higher time frame structure in correlation with any other time frame structure. So actually the correlation of higher time frame structure with lower time frame and lower time frame with the correlation of higher time frame, and why those price deliveries are very important for you to understand. So again, structure does not help us actually trade. Structure is what is rooted in the backbone of institutional trading and order flow and where they want to take their potential positions. Now, that partnered with the idea of supply and demand zones in the market and how those supply and demand zones might or may not hold based on the mitigations that they've had, along with potential Wyckoff that is undergoing in a given area, whether we're undergoing markups or markdowns, and how we're undergoing them is what is going to help us actually frame a given bias and a given direction, as well as refine entries to where we want to believe price is going to go. However, structure alone is not always the thing that you can use to predict guaranteed direction. Now, that does not mean that you cannot build a system around the idea that if we have structural points being put into the high side, that we can look for potential buys to come and take new highs, to look for potential buys to come and take new highs over and over again until it fails. Now, if it fails, then you start looking for sells to come and take out sells. To start looking for sells with stop losses above these highs, of course, right? To come and look for sells to take out those sells. To come and look for sells to come and take out those sells, right? And already as we're looking at this with proper risk management, aka securing yourself at a given amount of pips or taking off positions or even going to break even after a certain amount of movement, you can see how even when you're wrong about structure, it can stop you out at break even or actually make you money, as like this sell worked right here. So again, make sure you go back into your own charts and follow some structural points. I'm going to delete some of the stuff we had on here just to make it a little bit more clean so we understand where we are in this market, just like that. Okay, and we understand what we are looking for, which is continuing bullishness at this exact point on Euro USD on the 4 hour. So as you understood, we spoke about this right here, and we also spoke about the fractal nature of this market. And what I mean by that is that despite the fact that a market can be delivered to you in this bullish given structure, right? So this is very bullish. Let's actually look at this example right here. So focus more on this. So we can already agree that this right here and the delivery of this price is indeed very bullish. Now, this is where structure can begin to confuse a lot of people, and this is where understanding the other things is going to come into a lot of it come in handy a lot, because not just structure will help you predict the direction of this market. What I mean by that is, as we take a look at this, let's discuss what potential structure could be doing on a lower time frame. So let's move over here and just focus on this bullish structure. So let's write this out. Actually, in black we have denoted potentially, let's imagine a 4 hour bullish structure, right? With the expectation that over time, or at least the next leg in this, right? So a lot of you should be thinking about this. If I were to give you a next leg, where would you expect it to stop? Somewhere within here, right? Or somewhere anywhere above this last low. Because theoretically, if the order flow is bullish and they want to remain bullish and continue making money on those bullish plays, then they will continue to keep themselves above this final bullish higher low structural point. Now, if this is the 4 hour bullish denoted in the black, right, what we can also assume is that there could be structure that is playing out on a lower time frame. And this is where we get a little bit into the nitty-gritty details of why people can get very confused when it comes to structure. So let's say we have structure here, right? Then we put in bearish structure that is still part of a larger bullish structure, right? Then we start putting in some bullish structure. So this is very simple, right? Same thing. Bullish structure being delivered, bullish structure being delivered, bullish structure being delivered, still bullish, potentially short-term bearish, right? Because we're breaking down with structural points that are considered what? Bearish, right? But those are still part of what? An overall bullish bias. Right, so again, the same way we looked at those bullish things, again, make sure you're working through the videos one step at a time, because we go over this and we're going to get deeper and deeper and deeper as we go on, and you're taking notes and you're looking at your actual charts. So this is delivering it to you bullish, 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 right? And the expectation is that the next point, whether it's here or here, should form right above this point. However, in this case, remember that we're also working with a higher time frame. So despite the fact that we're looking at the orange, which you can consider to be, so if we move over here very quickly, let's zoom out a little bit. So we can consider the orange to actually be a, let's say, a 30-minute time frame. Right? Now, this can apply to anything. This 4 hour could be the same as saying a weekly, and the 30-minute could be the same as the daily, right? But the idea is we're just using this to explain this fractal nature of this market to you overall. So what's actually happening is we get confused, or a lot of people do get confused in smart money rhetoric as they're learning it, because they're expecting certain things to occur and they're expecting certain structure to hold, but that structure doesn't hold, and that destroys their fundamental idea of where the where structure actually wants to head. But they don't recognize that it's because it's part of a larger move into more into bigger discount pricing or premium pricing, right? And what I mean by that is this right here is the first perfect example of that. And the way I'm showing you it is because let's highlight structure again the same way we did on this markup right here, with blues denoting higher structural points being put into place and reds denoting lower structural points being put into place, right? So let's use the blue, right? We have a higher structural point, a lower one, a higher one, a lower one, expecting price to hold above the last lows, because even if we're on a lower time frame, if the order flow has shifted bullish or has shifted bearish, that should hold until it does not, right? So we have this, expecting the next one to come anywhere inside here. It could come to here, it could come to here, it could come to here, but it shouldn't technically get below this, right? So we put in this, we put in this, we put in this, we put in this, and now we're expecting what? For a new on the form where? You know, here, or even anywhere that's above this last low, because price should hold with its structure. However, what we're now forgetting is that this structural move is part of this larger structural move denoted here, right? So again, the same way we drew those blue lines, let's draw those blue bullish structure the same way we did right here for the higher time frame 4 hour. And what I mean by that is here's a low, here's a high. Here's a higher low, here's a higher high. Expecting what? For price to come at least somewhere in here. It could come here and keep going. It could come here and keep going. Or it could come here as long as it remains where? Above this last structural point. So this is still valid bullish structure to expect it to the top side, right? And that gets put in right here, which makes this move, which makes this move, which makes this move, right? And so on and so forth. And we can follow this all the way up as structure is given to you and delivered in this specific way. Now, as structure is given and delivered to you in this specific way, we can do the same thing with the red. So as you can see, there is no red structure on the 4 hour bullish because the 4 hour has remained bullish this entire time. However, now that we're beginning to look at the lower time frames and looking inside of price action within that 4 hour push, right? We are getting a completely different story about whether the market is going bullish or shifting bearish, right? So I'm just drawing out some few things here because we're going to follow this along now very quickly. So the same way we just spoke about these large blue ones denoting this overall bullish push to the top, right? This is all bullish on the black, right? So the black, the higher time frame. When we look at the orange, there's a different story being told to us altogether. And what I mean by that is, let's just take a look at the orange from here. We have a low getting put into place. We get a high. Great. We're expecting what? For prices to give us a new one in any of these areas, right? So there's one here, and then we get a new one. Now we're expecting price to give us a new higher low in any of these areas. So what do we get? We get one right here, and we get a high. Now we're expecting for price to give us a new one in any of these areas before doing what? Going higher. However, because it is part of this larger bullish push, what's actually happening is we shift, right? So we put in this high, and then all of a sudden we shift to this low. So the second we break down. Now, as we shift to that, we've already started to put in bearish structure, but we don't know that this was actually bearish structure until this low was put in. So that is the idea of confirming a certain given structure. Okay, we're going to talk about that in a future video as well, but ultimately let's follow this along. So we're expecting now for that institutional order flow on this lower time frame, orange time frame, whatever that is, has shifted bearish, and that these bearish levels will hold. However, as these bearish levels are holding, we're anticipating that the bullish structure, the higher one, the black one, is still going to hold at the previous bullish one. So this is when counter trend trading, or the idea of counter structure or structure within structure, begins to come in handy. Because what you're seeing is structure is bearish indeed. But when it gets here, instead of expecting this right here to continue to occur, we are already preemptively expecting this to begin to break to the top side. And as a result, we can see how price is being delivered to us in a bullish nature as we follow this all the way up. And as we keep following it, you can see that all of this was actually bullish, right? So even though there was this little bearish push inside here on the orange, notice what's actually happening. The real bullish part of that orange move before was from this low, which means that this could actually come all the way down into these areas here, right? This demand zone, whatever it might be, as long as it doesn't get down below this structural institutional point, and then continues where? To the top side. Then it finally shifts bearish here again. Bearish, bearish, but now, again, at this point specifically, because of the bullish structure of the 4 hour, where you have a low here and a high here, you might expect the 4 hour to actually come deeper. So when price gets to these areas, that's fine to look for potential sells at those supply zones. And again, all of this stuff is going to make more sense. Right now, all you need to do is begin to take in this information, because over the videos, or the course of the course, over the webinars that we have, over the time you have spent with me and the traders in this group, you'll begin to understand this at a significantly deeper level. But right now, we need to work it into your mind as you begin to see it, and over time, you're going to see it a lot more, okay? So we put in, bullish structure after that, and so on and so forth, and it continues. Now, what's even more important is that as we're looking at this, we can get even more confused. And why and how can we get even more confused? Well, let's assume that the green, in this case, so let's move back over here, is the 5 minute, right? 5 minute time frame. So if we can assume there's a 5 minute time frame in the form of the green, and we actually just make this a little smaller, we zoom in here, right? What we're not recognizing right now as we're speaking about all this is that as we have this price action delivered, right, we're actually going to have the same thing happen with the green. And what I mean by that is we're going to have structure being delivered in a certain way that's bullish, shifting. I guess it still remains bullish in this case, right? So again, follow the points. There's this low, there's this high, there's this low, there's this high, there's this low, there's this high, still expecting for price to hold, and it does, right? This low, and then we continue, and structure continues to be bullish. So we have this bullish push, bullish push, bullish, 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 and then it shifts. And at that point, again, structure on the lower time frame institutional order flow on this green. So again, forget that we're looking at this as a 5 minute, because this could be a 1 hour within an orange, 4 hour within a black daily or weekly. But we're just looking at this from these specific time frame point of view, right? So prices again shifting bearish and bullish on this time frame relative to the higher ones. And again, as we're seeing this happen, you can get very confused as to where to expect potential structural points to form. And as a result, when you start looking at some supply zones in these areas, you begin to want to sell them without recognizing that overall, the bigger picture is showing you what? That it's part of a larger bullish move. Because that same little move in here that shifts bearish is actually just part of a bearish move on the orange, which is actually shifting the black to continue bullish. So again, even though I just spoke about a lot of different colors, kind of go back, kind of listen to it a little bit, or even study it yourself, and just understand that the fractal nature of the market allows for structure along multiple timeframes or within each other, because price doesn't get delivered like this right here, right? So price will never be delivered to you like this, right? There will always be, when you look at price action will always be delivered to you in a way that looks more like this, right? And this kind of price delivery can fuck with your emotions. You can get very confused about where exactly the structural points in this move are, because as it moves, it puts in certain structure that you want to continue to see respected without recognizing that it's part of a larger time frame structure that's going to see breaks in structure short term that you might start to think are long-term shifts and look to sell the supply zones in these areas. And as you look to sell them, you get stopped out, right? Because you're looking for this to occur, but instead this occurs and you start wondering why these areas of supply and demand do not hold. And that is the reason they do not hold. It's because they are not in tandem with what the actual structure from the given timeframes are telling you it wants to do, okay? So with that in mind, always recognize that structure can be shifting, but also always remember that the higher time frame structure is the most important one. We're going to talk about that in a second as well. So let's consider what we have right here. Now, you see this overall move, right? Right here. So let's actually do this very quick. Let's delete some of the stuff we have here, just like that. Let's consider this move right now, okay? Now, this move overall makes a lot of sense to a lot of us, right? Let's actually go like this, like this, like this, and let's make that smaller. Okay, so when you look at this, you now understand that you have just normal bullish structure, right? And that overall bullish structure has structure within it that is bullish, that shifts bearish, that shifts bullish, that shifts bearish, that shifts bullish. But within that structure, you have even more structure, right? The green, if you can see, it's very bare, but there's green in here that shifts bullish, shifts bearish, shifts bullish within just the first bullish push. So understanding that is very vital because now you understand how structure can be delivered to you in very weird ways. Now, again, as we're seeing this develop, you could already start to expect this type of thing to occur, as we spoke about, right? And continuations, bullish. Now, you might expect that, but if you hadn't zoomed out, for instance, and taken a look at the higher time frame, then you still might have suffered from what we just saw happen on these lower time frames inside structure. And what I mean by that is if you didn't zoom out, right? So again, the black in this case was, as we said, the 4-hour time frame. So let's say we actually zoomed out. Okay, so that's a bad zoom out, but let's say we zoomed out to a weekly. Let's actually make a different color. Let's make it gray. To a weekly. Okay? If we zoomed out to a weekly, what we might see instead is that we actually have bullish, 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 right? And we just made a new high. And the reality is we could start to do what on the 4-hour? We could start to see a breakdown in price on the 4-hour, shifting structure to be bearish, trading off of potential demand zones, looking for price to come lower, lower, lower. And as this happens, right, what we start to do is we start to see the bearish structure. And we're like, okay, we're bearish. But we don't remember that this was all part of a potential higher time frame delivery of bullish structure, which could mean that it actually wants to continue to the top side because it's part of this institutional order flow. So they shouldn't get below this if they have multiple orders, especially if they're large amassing orders that they want to take to profit in these areas. So what will happen is this 4-hour bullish structure, right? I mean, bearish structure can hold for a while, but if you're not looking for or cognizant of the fact that this right here could occur, then you're going to miss potential buys in here, or you're going to miss that this supply zone isn't actually going to hold, but instead will be traded through and might shift entirely. Now, as a shift occurs, just because we've shifted bullish does not mean the 4-hour has to remain bullish. And what I mean by that is, if this shifted bullish, right? So this is a shift of bullish, right? So if you follow this, low, high, lower high, lower low, lower high, lower low, higher high. And we can start to expect new things like this to be put in place. But this can also happen. We can get this put into place, then this get put into place, right? But then what we can see is here, actually like this. And what we can see is this get put in place, this can get put into place, this gets put into place, right? So now we have this bullish structure being developed, but instead of continuing like so, we actually see a move below all structure, breaking structure down, right? Shifting bearish, but then resuming bullish. So this right here, this specific move in here happens a lot to people and actually confuses them a lot more than it should. Because what happens is when a move like this happens, they anticipate that we are potentially shifting bearish from the original bullish move and intent that we had, without realizing that over time, like we've spoken about, structure can even shift within bullish structure, right? So again, within this weekly bullish structure, price has shifted bearish, but still is part of a bullish push. And as a result, even though this happened, we are still not expecting potentially for lower prices to be put in place like so, but instead expecting for new prices to still be met higher. And that's because it's part of this type of structure. So very quickly, let's take a look at how that looks like on an actual chart so you guys can work with that a little bit, because like I said, this is all the building blocks to what you're going to be working with down the line. We don't just trade structure, but you need to understand how structure can be delivered to you, because it's the only way that you're going to understand how to trade on literally any time frame, because you need to understand that it can switch on you on any time frame because of a potential higher time frame, and that it can switch on a lower time frame, which could fuck with your own eyes, which could literally mess with your own idea of what structure is, even on the higher time frame. Because just because the weekly is doing this, right, over time, does not mean that even on the weekly, you might not see price being delivered like so. Right? So on the weekly, you might actually see price being delivered like this, but you have to recognize already that the weekly is still putting in structural points that are moving higher. Okay, so let's take a look at this again, right? As you know, we were all taking a look at that 4 hour, and let's discuss why exactly any of, this bullish structure happened into this bearish structure, into what we now see as bullish structure. Now, all these little buying client, BC, AR, ST, all these things on here, forget about them. All these lines you see here, forget about them right now. All these little rectangles you see right now, forget about them. They are not part of what we are learning right now. This will be covered in later course content videos for the private mentorship, okay? So let's dive down to a lower time frame and take a look. Actually, we can stay on the 4 hour, because it will actually explain to a lot of you how even a 4 hour or a one time frame where you're seeing price delivery bullish to screw with you. And what I mean by that is, during the time of this price being delivered, you might be looking a little bit deeper and seeing the low, the high, the low, the high, the low, the high, and you might start to see a shift bearish. But guess what? You are correct about that bearish shift. But that bearish shift is part of a lower time frame. So if we get lower, we'll actually see this a lot better. Part of a lower time frame shift to give us bearish price action, short term, as you can see, this is bearish, to then move back long term, because it's part of this larger bullish run, right? And the same way that we have all these bullish points being put in place, why are they being put into place? Well, let's get up to a daily now, and let's take a look at the higher time frame. So taking a look at the higher time frame, or even in this case, because there's not enough, let's take a look at a weekly. Actually, a daily is fine right now. So let's think about what the daily price action and structure is actually doing here, right? Let's start from this low, just to make it very, actually, we can start from all the way back here, this low right here. So let's think about what's happening. We have this bullish, we don't have bullish anything. We have this move here. We have this push up. So we're expecting bullishness. Okay, bullishness has happened. A push up. So we're expecting that these lows here are going to be the lows that hold, because they're part of structural moves higher. So we put in this and we put in this. Great. Follow that up. We put in a high. Okay, great. The high has been put into place. Then we need to put in a low. The low can occur anywhere inside here, because that's structure on this specific time frame, or how we can look at it, right? Now, as we're doing this, a lot of you might be asking about the structure within. And guess what? That structure does exist, and you can even see it on the daily, right? For instance, there is bullish, 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 potentially bearish, right? Bullish, 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 bearish, 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 bullish. Bullish, 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 right? So that's all bullish. But the overall main swing points of what's actually happening here are being shown with these larger moves, right? And as we follow these along, here you go. What's the next expectation? Well, the expectation is that the next price move should come somewhere above this point here. And that point can be right here. So as we're watching a lower time frame structure be delivered to you, which on the 4 hour might appear like so, we already have to be cognizant of the fact that this shift, bearish, could be short term as a result of a higher time frame bullish, as you can see, a higher time frame bullish structure to be put into place. Now, if we go to the weekly, these structure points will make even more sense. And what I mean by that is, there you go, right? On the weekly, that's actually the points that we denoted using our daily larger swing points a second ago. So if you use the weekly in this case, you'll actually see the swing points we just used. High, a low, a high, a low, a high, higher low, a high, expecting a higher low, a high, expecting a higher low, and so on and so forth, right? The same way we have with the monthly, right? If we jump up to the monthly and get even crazier about it, let's draw a green one just to keep it, a little bit different. on all the time frames and zoom in again. Again, ignore all the stuff that we have highlighted here. We will talk about this down the line. What you'll see is we're actually in an overall bullish structure, right? And what I mean by that is we got even to a higher time frame. We have this low, we have this high, and we came to make what? A new low, and we're looking to do what? Make a new high. That's very long term. But if we got inside the price action of this monthly, we could potentially see a low, a high, a low, a high, a low, a high, a low, a high, a potential shift, but then a new high, right? A low, a potential shift, boom, a shift, right? And we break down a structure. A new low, a new swing point low, right? A potentially, what? New high, new swing point low. A break of structure. Now we're again bullish from this point here to this point here. Expecting what? For price to break down, not below here, and it does. And now what are we expecting? For a new bullish play to be put in place, right? And again, structure, as you can see, even on the monthly time frame, can shift back and forth. But understanding where structure could be heading is part of understanding where the institutional order flow and the orders on behalf of the institutions and the composite man are in the market and where they want to head. Okay, so this is how you can read the game of structure. And again, as we do this, you can go back inside and then look at the weekly. And this bullish push has the weekly bullish push that is still bullish on the weekly. But we get down to the daily, and the daily has shifted a little bit in the sense that we have daily pushes higher, right? So again, if we want to denote a daily, we go low, high, low, a higher low, higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, potentially lower high, but then a higher high, right? So potentially expecting what? A higher low and a higher high, and a continuation that's part of already a given bullish continuation on the weekly, because that's already happening, which is all part of a given monthly continuation on the monthly. That's all part of a potentially, if we go to a 6 month, right? Okay, actually, I don't think I can view a 6 month chart. Oh yeah, I can. There you go. That is part of even, maybe even higher. Let's go 12 month. Maybe 20 month. I mean, we can get really crazy about this. Okay, I don't think we can go that high. I think 15, I think like the 12 month was the highest, so like a year. But as you can see, all those moves are part of an even higher time frame. Let's make this red. Okay, that's fine. We can make it red, which is part of a higher time frame, low, a high, and we just put in what? A high, I mean, a higher low that should be above this last point because institutional order flow is already shifting bullish right here, expecting what? For order flow to continue in a bullish sense. So this is how you read the structure game on any given chart. And this is how you need to understand that structure can shift on any given time frame multiple times, right? So structure can shift a lot. And understanding that structure can shift is going to be the bare bone core foundation of everything else that we understand, because structure is going to help you set a given mini bias, and that mini bias will be colored by multiple other concepts in this market. And those concepts are what are going to let you analyze the market to a point where you're happy with your own entry criteria, and you can refine that, and you get a little bit deeper with trade management and all that other fun stuff. So hopefully this video on structure made more sense as we got a little bit deeper into the fractal nature, and we may have another subsection on structure right now, unless there isn't anything else that I think is important for me to discuss on right now. Okay, so I'll see you guys in the next video. Thank you very much. Take notes, go test it, and let's continue. And I look forward to seeing you guys in the future webinars, of course. All right, so make sure you take notes, and I'll see you guys then. Thank you.